Let's get to Bob Pisani. Hey, Bob.
Yeah, down 200. And the problem is the big industrials, your Boeings, your Caterpillars, 3M, weighing on the Dow. They were leadership groups early on this year. And, of course, Home Depot, consumer name, weighing on the Dow. And the strength of the consumer is a big issue. You heard them talking about the credit cards. Take a look at the sectors. Your risk-on sectors are the ones that are weak today. So you want to look at semiconductors, you want to look at metals and mining, you want to look, there's the banks, it's 3 days in a row for the banks to the downside now. And defensive stuff, your healthcare, utilities, doing a little bit better. So more defensive posture to the day. I think the big decliners here, and I know David mentioned this, but the credit cards are important here because it goes to this question of loan loss reserves and what kind of net charge-offs we're getting. Discover had 2.37% in their net charge-offs last night. That was a little higher than expected. See all the credit cards down. Amex is probably 40 points, 45 points on the Dow right now. So you see them all trading to the downside. So the question now is, where are we in the economy? And were the numbers yesterday, the industrial production numbers, the retail sales numbers that were well below expectations, were they outlier events or not? And the issue is now everybody's trying to figure out how much damage has been done already, not what's going to happen in the future, what's already been done. And the bears are now out and saying, well, your soft landing scenario, guys, is a lot less likely now. And the bulls now need something. They need to see this data improve and see that industrial production retail is going to be outlier events. Or they need the Fed to get less hawkish. And, of course, nobody believes that's going to happen. Nobody thinks the Fed's going to sound less hawkish. So for obvious reasons, Lael Brainard speaking today at 1:15, and there's an unusual amount of attention around this. I can't imagine why she's going to say anything different necessarily. But the good news is, mercifully, maybe the Fed will stop talking. The blackout begins Friday night, and the next meeting, of course, February 1st for the Fed. So we'll get a blackout, and we'll get less Fed speak next week. Meantime, we've got about 50 companies reporting for the S&P 500, including Procter & Gamble. And, of course, this is a difficult story here because when you have sales up 5% because the prices are up 10% and the volume's down 6%, well, that's just a problem out there, and it creates margin issues. What happens when they start pushing back against the 10% prices that are out there? The good question here is China is a big part here. It's about 15% of their overall revenues. So that may be a very important factor here. And we may see those numbers, those volume numbers, improve when China reopens a little bit. But Procter & Gamble is one of the most steady earnings growers, one of the most steady dividend growers. It's an aristocrat, dividend aristocrat for years. It routinely trades in the mid-20s on a forward multiple. So it's one of the most rock-steady stocks that are out there, and why it's one of the reasons it's so popular among investors. Overall, just want to chat about the important thing about earnings here. S&P 500 companies were basically flat for the year, 2.8% downside here, first quarter, second quarter. You see these numbers here, Carl? We're basically flat. And look at that fourth quarter up 10.5%. Carl, the entire analyst community is hiding out in the fourth quarter of 2023, believing that somehow we're going to have a miraculous turnaround at the end of the year. Carl, back to you.